Hello, hello. Good morning. Welcome to another ES Futures Trading streaming video. Today is Sunday, October 1st. It is 5 p.m. Eastern Time in the US. Let's check what the market is doing this week. Was doing this week, these days. I wasn't present the last couple of days, Thursday and Friday. I got something to do. Also, more higher. More likely I'm going to be absent tomorrow as well. And Tuesday. But what I see, I was monitoring, you know, I was very interested in see how this week, this month was going to close. I was very interested in seeing if the market had excess the past week, but I was curious to see if the market was going to close inside this range. It did not. It closed in between the ranges. Within the upper, we can see there is a 12. It starts 12, 3, 6, 9, 12, 15 range here and 18 range down here, and it closed right at center. In between these two. The monthly also has below. It was closed below this 2-month range, below this previous bar low, but just at the high of this range, which puts the market in this interesting situation where it can, it doesn't show anything yet, right? It can have penetration of this range and have acceptance here below, and this movement can have downside extension because the market is closing at the low side, at the lower side of this bar of the past month. But at the same time as well, if the market opens here and comes back inside this range, it could very well target the opposite side of the range, and the market can go all the way up to here or just below this and still be a downside market in the monthly time, in the bigger time frame. Notice how this break it happened really, really fast here. 3 days, the market came out the range and found some support. There's nothing here really, but in the daily, we check the daily time frame, there is support here around this level, and this level down here, this monthly low, the 4350 here is also the low of the range, and you can see how the market was bought exactly from this level and now being sold from this level as well. And it has some relevance in the monthly, weekly, and daily time frames. We have support down here, and this could be a resistance maybe, but notice how the daily how hyperextended this market is to the downside, and it's forming a range here. We can say the market maybe has a 1, 2, 3, 4 day range, or even 6 here in the daily time frame, and around the 7% pullback. When we have 7% pullback from this high here, 7% is right there, and the market is right there. Hasn't extended towards the 10% pullback, which is what, if you were following the news, this is like an area to buy, right, for bigger capital. They see more. I guess this is the only reference. Those talks, those interviews were starting to appear in the news, right? The buying opportunity may be coming, or blah 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 blah, around the 4200. And I believe this is the reason why they are telling that. But the market at this moment is in this particular kind of like, interesting zone. You have a big range down here, nothing. There's nothing here up high, above here, and there's nothing here above. But there's a big range here down here. And going and checking the other markets. I was checking this. This, for example, is the bond market. The bond market has taken it. It seems, like it's paying attention. It was paying attention to these numbers. Last week, we have personal income and outlays. You have PCE, core CPE on Friday, which is a measure. This is called a favor indicator for the Fed to measure inflation. But these inflation numbers are having less and less reaction now. like the market is getting tired of that. They may disappear. There are always something, but it seems like it's not paying that much attention as used to be. I used to do. Now this Friday we have the only interesting, or what could say maybe relevant event for the upcoming week is non-farm payrolls that are here. This is non-farm payrolls. Otherwise, ISMs maybe here. PMI, there could be something here, but there's not that much. JOLTS also, I think this could. This one alone, this one could be interesting to follow. Manufacturing PMI as well. But mainly these two. This one and this one. Not. I believe also Friday is the beginning of the official kickoff of earnings. I think banks start to report on Friday as well, and then we have another cycle, another cycle that starts to. All the past numbers, all the past earnings were a reason, excuse, or catalytic for the market to generate these rallies, right? These fantastic rallies. But I don't know how the market can react now because of this, right? This bond market is really low, rates are really high. If we check the crude market, also there's nothing here. Notice how this market is going higher. Seems like a short covering here. But this is different. This is a different kind of market, right? Because you have another kind of information you have to monitor for this. And the reaction the dollar is having, even the dollar is going really high, is having a rally, a big rally from these lows, which was a reaction of this, can you see this break here, right? This break that we have here happened 1, 2, 3, 4, 5 days. And for the market to come back to these highs, how many days had to pass? Like 20 days, something like that, even more, right? It takes a long time for the market to recover, and it can fall back really fast. This is interesting as well. Dollar is very high, and this is supporting. The higher this is, the better for tech or big companies are. Gold. Also, there's another interesting story here in gold. Notice how this break happened. Very systematic break here, very mechanical break here. Then there's a rally, and now liquidation here. And notice that what this market has here. The market has nothing here. There might be some support. They may find some support around the 1800 here. Because this is when you have some rally. But it seems like the market, at least for now, is not paying too much attention to this market. Right? Now, I'm going to go back to my charts. There is nothing here at this moment. The market is between these two ranges. This is I think this is the nicest chart here, the medium time frame. Very crazy. Daily time frame. This is more clear. And if I go and check my daily profiles from Friday, we have this distribution here. Oh my God! Look at this. What is one? Okay. Wow. Look at this, man. Look at what happened here. This break. We have a market open with a gap and a spike to the upside. Then the second period takes the market in, closes the gap and puts the market inside, which changed everything here. Next one we have an inside bar. The break is to the upside. The rule is go with the breakdown inside the inside bar, preferably in the direction of the trend. The trend was to the trend is to the upside, right? Market's here higher and was higher. The trend was to the upside. Value was higher here. But the fact that the market closes the gap changes everything. I start to monitor value here. But just notice where this low. I guess this could be the tail here. You know, where it was bought this rally high. This is not relevant anymore. And this was one opportunity. I think this could be one opportunity, and the other one is F failing to close the distribution. Closing the distribution, if there is anything to the downside, the market will not close the distributions here. Now notice where this rally is to. Where this rally was M highest. Right to halfback. Okay, there was a weak level here on this day. Now there's another one. Rally, late rally to halfback. To daily halfback. Here, though having levels a little excess, but excess anyway. You notice where this excess is. I'm still keeping this information fullback. There was a pullback here on the previous day. I mean, there was a lot of reasons here. This pullback was exactly to the 30-month range high. Now that has been repaired. Now it's only the 30-month range here. 30-month range high. Remember from the weekly. From the monthly time frame. This overnight has been something that is very interesting here, which I want to show here is this day. Notice where this high is. I want to put this as a daily high. This is 929 high. This is something here. The low is distribution from the overnight. There's nothing here. No? There's nothing here. There's a lot of volume though. But the fact that it comes from this lower distribution from this overnight, all of this inventory has been removed now. This is not relevant anymore. I won't say this is weak. This is good. I guess more relevant is higher the previous. This is a weak level, man. This is weak. Weak night. Why is weak? Because it's for mechanical reference. Exponentially weak high. This was relative to this day. This one and this one. This one is history now. This one remain really high. Sell-off is not that anymore. What is the sell-off for Friday? 43.25.50. Sell-off 43.25. No freaking way! Right here. Oh my God. Zero plus. And last 43, 29, 20, 25. Right? What the yellow line is. 25. Like that. Value is overlapping to lower. We have a distribution. No, my God. Look at where this distribution closes here. It's a mechanical reference as well. Distributions close. The trade remains the same. This market has been traded by. The trade's been dominated by very short time frame trading. You know, bigger traders trading the small traders here. Something that happened on Thursday and Friday. I didn't play a replay. That's what I want to do now. Is when I check the histograms in this M, there was nothing here. I don't know what happened with L, but I can see just like something like the beat just dies. The buyers are just disappear from the market. Kind of like the same situation. By just observing the histogram, the same situation may have happened here as well. I don't know for sure. And that's what I want to check now. I don't have an opinion on this market, really. I'd rather just watch the market how. This is Thursday. This is Thursday. Just wanna play it really fast. Oh, Thursday open with a gap as well? Oh no, this is Friday. This is Friday. This is the gap. Here the gap closes. Market opening up here. This is the close of the gap. We had an overnight spike. Then other interesting thing is how much volume this has. Really high volume. And it was the case on all the other days. And notice where this, up to what level counts. I'm going to close this. Unfortunately, I'm going to close just for a moment this thing. Notice what the market. This is an area volume. It adds more. It removes these shorts from here, but adds shorts re-enter here again. Taking this level or building volume value around this level can target this another node, this upper node of volume here. And this day in particular has a lot of volume here. All the way. This is very wide here. But for the market to go higher, it needs to take this volume out. Notice what kind of high this day has. Freaky, really. There's potential for firecracker effect here. Stops here, stops here, stops here, stops here, stops here. And then this one, you have 1, 2, 3, 4, 5, 6. Ooh, look at this. He keeps going. Oh my God. This market can come all the way up to the center of the gap really easy here. Really easy. But it didn't happen. It didn't happen. When what you expect to happen doesn't happen. Okay? Then you start to look at the other side. What happened when the market closes the gap? It changes everything. You start monitoring value here. Settings, chart session settings. UVARs, data values, settings, data value area. Come on, trade volume, TPOs. And when the market re-enters previous day range, I start to see the opposite side of the range. Okay, I want to speed up because I want to see M. I want to see what happened with M here. Oh, look at that. A, B, C, D, E, F. It don't take this high here. Oh, look at these histograms. Horrendous histograms here. This one's really bad. Really short time frame trading here. This is just short time frame trading here. Look at this histogram, this one, this one, this one. This is kind of different, but all these ones are really signs of short-term trading here. A, B, C, D, E, F. That was an F. We're an F. G. Oh, notice this nice taper here, but weak level here, matching lows right at this volume here. If this level is, if this volume is taken, there could be some downside, some serious downside here. Notice that the distributions were not close here. Okay, now these longs are being forced out, and now we have shorts up here. Potential for firecracker effect here. Come on, look at these histograms here. I can see these histograms here as well, but when I separate here, kind of like gives me, it makes the picture clearer. Now, this is L now. This market is getting short here. You can see the selling here, selling. But short sellers are not gaining much. Oh, look at this. At this moment, traders remember what happened on Wednesday or Thursday. There was a gigantic short cover rally at the close. We're trying to do the same. There's some volume here. It rise. This is M, right? Oh, these were matching highs. These are matching highs here. This hasn't taken these stops. They are still there. Halfback, very mechanical trading. The upper side, lower side. Just I'm playing this to like, oh, this was L. This is not M. Mechanical trade here. This is not good. Now this has been repaired. want to see how this closes. Saving here. The opportunity was this one, when the market takes this high out, or this low, this my market didn't close this distribution. Come back inside, didn't close the distribution. That's a short. Okay. Okay, rejection here. Can you see how fast this one comes to the downside? It comes up here and then just boom. There's a lot of buying here. This is what I was interested in. This was very interesting, but there's a lot of volume in the long off period. Now there's a bunch of, but not much really. Really medium, not much. I don't see thousands here. Very small. Alright, I got this one. Now I want to see Thursday here. 28, same, 9:30, create. Regarding the days, the market itself, I think the market is in this position where it's looking for more information, more data is required, because I feel, or I see like the market can go really long distances, the market come back inside this range, you can go long distances here, but the same thing can happen in the lower side as well. If the market re-enters this range here, it can go it can go long distances to the lower side as well, because that would mean that this range is taken. And below this range, let's look at what is below. There's nothing here. Okay, nothing here. No ranges, no nothing here. You know, extended, and then one big one here, one big one. What is below this? A gap, multiple lows, 1, 2, 3, 4 lows, gap, nothing here, a gap here, nothing here, all the way to this level, to the 39. Okay, all the way down to here. It can go long distances here to the downside. It can also do the same thing to the upper side, because the upper side is also, it cannot notice how the hyperextended is to the downside. Well, market is forming a range here. We have seen from the histogram, I mean from the when we use the market profile, we check this. And now this, for example, is weak, right? This one's also coming from Halbach. This one coming from POC. This day is a gap coming from, and the 100 is right there, is July low. The next one is a crazy day. It's a very elongated day to the downside, which high is a poor high. The other one is coming from POC. The other one value very low. So the same kind of craziness or weakness or very poor structure the market has to the upper, has in the upper side is the same thing, right? The same thing in the lower side, the same thing in the upper side as well. Both sides are equally equally poor structure, very weak structure, very questionable structure. Now I want to play Thursday here. What happened Thursday? Alright. Thursday, we have this rally. No, this is a balanced day. This is rally high. Nah, I won't call this rally high. Notice how it dries here. When it comes to this volume, it just dries there. We have a source of volume here. It's opening inside previous day range. Opening inside previous day range, advertised chop, and rotation. The exception is the market coming out of range in the first period, which is conviction in a directional move. That was not the case here. Looking to the upside. I'm just watching here. I guess I saw this movement all the way up, all the way to here. After this, okay, this is an outside bar. While this bar is closing, well, this is going to be an outside bar. To be an outside bar, it needs to close above B. It did close above. The next one this one opens up here, which is different if the market would have opened inside this range. It opened above. What else do I have here? One time framing starts, the market's out of balance. Next thing could be, next reference in the other side can be that one, which is this day's high. Continuation, we see the market taking this high out. Did you see how fast the market comes all the way down to here? It kind of struggles. It's struggling here. The market took this high out, so there is no more. This one is no more. The next level upside continuation is this high here. No excess up here. The action to the upside has not been completed. Nice taper though, really nice taper. Very low volume, low volume, low volume. This one has higher volume. Up here, up here, up here, up here. All of them have volume except this one and this one. Do you see how the volume dries here and it comes up here? You have to put these two together to have the same volume you have here. Up here and here. Now there's a new movement to the downside. This low is not good. Three more periods to go. Let's pull back to half back. Oh, yeah, how it dries. Did you see this? Another option to the downside after this was after this period ended. This option, now we have action to the upside. We are about to enter the last period. Okay. How it dries? What's happening? See? Oh, look at that. Like in the first half, take this range out. There's really no bias here. All right. Okay, I wanted to see that, how the market played on Thursday and Friday. It's not how I expected or how I thought it was. It was in kind of like has the same behavior, but it doesn't seem like it was that strong as I thought it was. I guess the most important thing for next week is if we have an upside trend in the daily time frame, which is the only one that is different from the major time frames. The weekly is going to the downside, monthly is going to the downside, but has this particularity that is in between two ranges. I don't have nothing for next week. So again, one day at a time. And as usual, after I do, I check.
Welcome to the week ahead.
I check Jim's weekly update. Okay, this is his YouTube channel, and he posts one video weekly, which I believe is very useful. It has a lot of information there, and I use them. I use him as my benchmark. I strongly recommend you to check it. It's just 3 minutes. Let's check it out.
Welcome to the week ahead. The operative word to open the new quarter, I believe, is going to be patience. The above weekly bar chart segregates the market into 3 zones. Returning to and finding acceptance within the upper zone is likely to be positive. Returning to and finding acceptance within the lower zone is negative and continues the same atmosphere that we've had. The center zone requires patience as the market makes up its mind. And the center zone represents, the market broke to the upside, and now we've tested back down into that area between, the lower distribution and the upper distribution, with the market resting, right in that area. As you read over the weekend, the financial press will tell you that following a weak September, the odds are very high that the market will rally. In fact, those odds they report are approximately 80%. At this time, it appears that we will not have a government shutdown. However, you'll also read that the last time there was a shutdown, it was positive and the market rallied approximately 3%. I've broken this down and looking at it through the last 4 market profiles. These profiles demonstrate the indecision or balance via the 4-day trading range with a settlement that's approximately in the center. Just a little more background. On Friday, PCE, which is the FOMC's favorite indicator, was positive. The market initially rallied, but was unable to hold on to the gain. Following that gain, the market broke. However, it was unable to show downside continuation. As the market settled for the end of the quarter, you'll see that we're approximately at the 200-day moving average. Trading is about change. There will be no meaningful upside, without acceptance above the 4-day trading range high. Likewise, there'll be no meaningful downside without acceptance below the 4-day trading range low. I hope this gives you some perspective of why we stress the importance of patience as we enter the 4th quarter. Thank you.
All right. What do you think? There's nothing in the market. Jim was highlighting this range, this 4-day range. This could be also maybe 5 or even the 7-day range. The potential for the 7-day range is there as well. But you have to be able as well to see when the market was having this break. It looks like it's going to break forever, right? But once you find areas like this, the potential for some sideways trading is there as well. I don't know how he has this 200 moving average right here. Maybe is the heck. Maybe is a new contract. No, I cannot see it here. This could be, maybe this could be here. but well, I cannot see it. What's my charts? If I use, let me see what can I use here. Let me see if I can open chart here where I can put any values. I mean, that's cute. I am just curious to see where he has that information from. Can I add something here? Refresh data, chart settings, display bar, by volume mode, by volume, by price, barcode, bears, high bars, by time frame, by this promo, settings. No, I cannot add 200 moving hours here in this. No, I don't know. I'm curious. I cannot see it. I cannot see how he has the 200 moving hours down there. And it's just, I guess the term patience is very important. But traders can be getting used to sell here now. It's amazing also how the bigs quickly. There's a lot of complacency in this market. The bigs just after this big break, it was around 17 or not higher than 17. It came down really quickly as well. Let's check how much is the bigs now. 17. Oh, it actually went all the way to almost 20. Well, it came down to 16 really fast in just a couple of days. I think there's a lot of complacency in this market. I can see that some traders are getting tired. I didn't see buying here at the closing of this day. These days, it's kind of like buying is this strategy that buy the dips, right? They are not having much. I'm not saying they are that the market is selling, because I don't see that, but I see a lot of trading. I see a lot of big, not bigger time frame by traders with more capital, maybe, that are trading the ones that have less capital. The market gets too short, and boom, there's a short covering in just after it gets too short. Market gets too long, and boom, long liquidation, back and forth. It's happening a lot. The potential for rallies is here. This market is extremely weak in the upper side, but these rallies can be like the one that happened here. Right? When you have this vicious short covering rally here, you want to see what short covering rally looks like. I can replay this day. What day is this? 9/27. 9/27. Let's replay. Let's open another chart and let's play it here. 9/27. New replay. (9/27) create. I will play the whole day, kind of fast, so you can have a reference. Oh no! So you can have a reference for the last, for when the short covering starts. (18, 19, 20, 21, 22, 23), and it's about to open in 4 seconds. Almost 1 minute per second here. All right, it's open. Open our inventory, and the market open inside the range. Arbitrage chop and rotation. The market was coming from a big break here. like 6 days in a row breaking, having big breaks. And traders are used to that. Okay, notice how the ball, let's see what we have. Do we have any tanks here? No tanks, right? Now, any tanks? You can use this as a reference as well. This is 30 minutes. Really low volume here. Mechanical low. The low is not good. Market has good odds coming down. The high is not good either. Very mechanical trade. Inventory was 100% long. There's a contraction to ordinary inventory. Notice where this B high is. Has not been repaired. This one has not been repaired. No tanks as well. The highest was like 6,000, 4,000. Ooh, even lower now. 4,000. Now we have this breaking. Coming. And what's the next reference for continuation? We have this one, and what is the other one? 4,300, right? Previous day low, 4,300. Notice where the market was bought from. Exactly from this. I mean, very mechanical trading here. Also does some continuation at high here. I'm never going to go long here because the trend is to the downside. The intraday and the daily as well. Value is also lower, so the trade is sell the rallies here. Now we have a rally here. Profile is getting wider. We have 3. Notice that we have 3 here, 3 here, and 3 here. When that happens, it kind of like a, it limits it limits the damage. It limits the downside extension. Again, volume, very low volume. No thanks here. If there's any problem, the 4,300 usually is an area where problems can happen. It's not unusual. Traders sell up here and then re-enter them out, cover here and re-enter the market. And I have a distribution here. One distribution, getting very emotional. Low volume, very low volume. By this time I thought, man, this could be one of those days that you make you believe the market will never stop breaking. So some volume in the lower side. The peculiarity of this low here is it has volume, volume in the lower side. But not that much. Notice there's no 10. We don't have 10s here. But now the market has 1, 2, 3 distributions here. Anything, I mean, it's getting very emotional here, very emotional. When you play this in real time, it was super fast. It was, gosh, it sent you to sleep. Now, this distribution has been closed. The next references on the upper side is this. Yeah, not this one, but the distribution itself. Closing. Anything serious we'll see the market building value here below. Will not close the distribution. Notice that the market is very, very short. Volume was very low. And here is when the squeeze came. Traders are so used to sell the rallies here right now. They have 1, 2 weeks doing the same. Not good high, not a particular. This time didn't even get higher. This high is better than this one. More value here. Low volume here, low volume here, low volume here as well. Relative to the period, we have good volume here. Now there's still the trend keeps going to the downside, Why you want to go long here if the market is going to the downside? I thought this was the beginning of the squeeze, but I was wrong. But you will see the change here, how fast this goes to the upside. And here's when the market gets too short, man. Market just gets too short here. All right. Notice. Okay, we have some pinks here. 3 distributions again. High. Ooh, look at this high here. Did you see the volume here? Really low volume, right? It keeps going lower, but volume is very low. Also, what happened? No, volume. I want to show volume. I don't have my charts open. Oh, I have it here now. I have it here. This day is slightly higher, slightly higher, slightly higher. Notice how it changes volume, right? Compare this one to this, okay? This is Wednesday. And this higher, a little bit higher. Ooh, this is the change here relative to this one. Now the next one is attracting more volume, more and more. This will have either a deep break, acceleration to the downside, or we can have a rebound here. Okay, because volume is coming here relative to the previous day after the market is coming down, really a long distance in 6 days, 6, 4, 5, 6 days, something like that. And this is, I guess, this is the beginning of the squeeze now. Notice how fast this moves now. Look at the extension. Look at that, man. All of these shorts here, all the trades that were selling price, that were following price. Gosh, man, I don't want to be here. I can feel the pain here. No, the market is coming back. The market is coming back here. I promise the market, as soon as I come back here, I'm going to cover. I'm never going to short. I'm going to be short again. Notice this high. Remember what happened here? Where this break came from. Once this high is taken, okay, I think that's the end of the movement. Anything serious will have extension to the upside. Will close outside. We'll take this high or close above. Let's see if that is the case. Again, they keep selling from halfback. Come on, look at that. Really long distance. 20 points in one period. That's a lot of volatility here. That's when the VIX was almost 20. Look at this high. This high is not good here. Some of these single prints have been taken out. This could be a good high, but this one is not. And the market is closed. All right. Did you see the difference between the movement here and the movement down here versus the movement up here? That's a short squeeze. Okay, I don't have anything else to say. I guess it's one day. I may be wrong, but I don't think I'm going to miss anything if I am not in front of the market. If I am not in the trading desk, Monday or Tuesday. Seems like the market has found an area where two-way trade can take place, meaning the market can go up and down, and extend the range. All right. The next thing I want to do before I go, I want to see how this market opens. There was a lot of talks about potential shutdown. The shutdown did not happen. That was, I guess traders were counting on that. Can you see this? This is trading. You never know what's going to happen. You never know what's going to happen. You have to account for what is there. Inventory is very short. The potential for short squeeze, for a short covering rally is there, right? Story, as Jim said, the history is September is the worst day, the worst month of the year, and then We have rallies afterwards. And everything was there. Everything is there. All the conditions are there for a rally. Will it happen? Who knows? You know, when everybody's expecting something huge, I learned this the hard way, right? When everybody expects something, it just doesn't happen. Just like the opportunities, right? All right, guys. 5 minutes for the opening. I will watch how this opens. Relative to Friday. Wish you guys a good luck. Stay safe, and we see you